They are suing me for the full outstanding mortgage amount.
We don't want to, but we may have to think of selling the house.
And think about what a power of sale is actually doing. That's the bank stepping in, selling the property. But basically, if that person hasn't got that equity, who's absorbing the loss? I mean, they can go after the person who got the mortgage, but that's only worth doing if they actually have the funds. Canadian banks are sitting on unprecedented losses, and what we're going to go over in this video is going to show you why this is going to continue, and it's definitely going to accelerate. So first of all, let's get into what this couple is doing here in this video, because it's very interesting and telling to what a lot of people are doing right now in the housing market. So listen closely.
Are you kidding me?
Struggling with steep mortgage payments on their Toronto home, Sonia Sharma and her husband put the house up for rent and moved to Montreal.
Everything became so expensive.
So the first question that logical thinkers are asking here is, why would you put it up for rent? Why wouldn't you sell the house? But the real estate market right now, especially in Toronto and Mississauga, is absolutely frozen. So what a lot of people have is hope that they can just rent it out and then at a later date they'll be able to sell it, which will actually be a total disaster. And you can see the risk here that's building, but let's continue.
For us, that we had to actually look for a better cost of living place.
But they're still on the hook for $2,000 a month and may soon face a tough choice.
All in all, we don't want to, but we may have to think of selling the house.
And they don't want to, probably because what? They're sat on a loss. That's why they probably don't want to sell the home. So they're hoping that the values are going to go up and things are going to improve. But if anybody is just logically looking at the economy, you don't have to be a rocket scientist to work out things don't look good at all. The economy is not sound in Canada, in the United States, in the UK, in Europe, and things are only going to get worse. The yield curve warned us of that as well. Another interesting thing that is happening, and we covered this as well, is basically you're having the banks moving now with blanket appraisals. So many new condominiums completed in 2024 were not worth what buyers had paid for them because they had purchased them at a 30 to 40% premium above resale prices in 2019 and 2020. While resale prices have remained relatively flat since then, this typically presents a challenge when buyers seek mortgage financing, okay? So then you get onto, imagine a buyer who purchased a condominium for $1 million and contributed 20%, so $200,000. By the time they were ready to close, the bank appraised the unit at just $800,000. Normally, the buyer would need to provide an additional $160,000, 20% of the new $800,000 valuation, since their deposit was lost due to the decline in value. Now, this is normal banking stuff. This is what happens when you have a mania in the housing market. But listen to this, and we covered this already, but it's so important to understand what the banks are doing. So, however, with new condos, banks didn't require buyers to come up with an additional deposit because they pretended the condo was worth the original purchase price, a practice known as a blanket appraisal. In effect, the bank issued an $800,000 mortgage on a condo worth only $800,000, effectively creating a zero down payment mortgage. And that is the key point to highlight here, is that they are essentially offering zero down loans. Now, these zero down loans, what do they have? Insane amounts of risk. You're already in a declining housing market, and then you're going and offering even riskier loans. Now, this is exactly what happened in the United States going back in 2008. The loans just got riskier and riskier and riskier in order to try and prop that market up, because they've run out of new suckers to get into the market. It's effectively like a pyramid or a Ponzi scheme to a certain degree when you have this type of dynamic in a mania, in a bubble, which Canada was most definitely in, one of the biggest bubbles in the world. And it was definitely riding on the coattails of the Chinese real estate bubble to a certain extent as well, which is also popping, which was the world's largest real estate bubble. So it's very interesting what the banks are doing here. And then you you only have to look at the insane losses that are going on to realize how bad this is. And this ain't getting any better when you dig into the statistics and the numbers. And what you really have to think about is, who does all this risk, who do all these losses really impact? Well, to a certain extent, it is the borrower, because they'll be going bankrupt, they'll be losing a lot of money, but also it will be the banks, because most of these people are not going to have the funds to absorb these kinds of losses. And we've already seen the uptick in people going bankrupt, in people falling behind on their mortgage. And it's only going to continue, guys. It's only going to continue. So this is a power of sale. Toronto seller bleeds $155,000 loss from 2023. A condo bought in 2023 for $575,000 became a dark financial trap. Forced under a power of sale, the property was dumped at $420,000, slicing away $155,000 in just 2 years. And think about what a power of sale is actually doing. That's the bank stepping in, selling the property. But basically, if that person hasn't got that equity, who's absorbing the loss? I mean, they can go after the person who got the mortgage, but that's only worth doing if they actually have the funds. And in most cases, when people are arriving at power of sales, that's because they couldn't sell before, because they couldn't absorb the loss. So the banks are going to take insane losses, and the loans are just only getting riskier, even though the real estate market is frozen. This is absolutely baffling stuff. So this is in Niagara as well, which is important to note, because it's not just Toronto and Mississauga, it's happening all over Ontario. So Niagara Falls, another horrific loss in Ontario. The detached was bought in 2022 for $1.4 million. They have been trying to exit for months now and managed to do so after eating a $455,000 loss, so a $500,000 loss, not counting finances, taxes, real estate commissions, and fees, which is rightly so to point that out. So, you know, that just sold for $920,000, which, if you look at the average income or the median income in Niagara Falls, is completely insane, and still just at nosebleed levels in terms of bubbles, which just shows you how far this thing has to go and how we're only just at the front end of this thing right now. Still, which is unbelievable, I know, but unless they come in and dilute the money even more, which is definitely a huge risk that I think is coming in 2025, then basically you're going to have this continued deleveraging. And even if they come in and they just inject loads of capital in the forms of stimulus, that's still diluting your money. So it's a lose-lose situation anyway. So new home buyers are nowhere to be found. Toronto area January new home sales near record low despite excessive inventory, falling prices. So you've got excessive inventory right now. You've got sales at lows, and you've got a lot of sellers that are still waiting for the market to improve. They're still holding out in the denial phase. And what I want to show you when it comes to delinquencies, because what's really interesting, obviously delinquencies, they're really rising right now. They're up around 90% in Ontario, which is absolutely crazy when you really think about it. And they're up over 60% in BC as well. So they're rising quick, and they're rising in Quebec too. So you've got delinquencies that are on the rise, and they've tripled since a year ago. And if you look at what happened in the United States in 2007, 2008, you can see that delinquencies were not really doing anything whilst the bubble was going on. In fact, they were at lows. But then you fast forward to 2007, delinquencies start to rise. This is before the apex point of the crisis, remember, which is often seen as Q3 in 2008. And then they keep going up, keep going up. That's when the banks start having problems in Q3, Q4 2008, and you have the financial crisis. So it's actually doubling, tripling, and then you get the financial crisis, and then it just continues going on. And it takes another 2 years after 2008 before it starts to go down, and it's still historically high after that point. So that gives you some context of what's likely to happen. And obviously we know in the United States what happened as well. Interest rates got dropped down to the floor, but that did not stop the delinquency rate because people were so far underwater and there was so much inventory. And you're already seeing all the exact same signs as you had back then in 2008 happening in 2025 in Canada. And then if you look at credit market debt to disposable income, this is important, all the way to 1990, you have never seen credit market debt to disposable income peak like this before. Just look at this peak. So the deleveraging event is already beginning. The banks are already absorbing losses. It's just that they're being hidden right now. And it is just a waiting game to see what's going to happen here. And I think it's obvious what's going to happen. The wheels are already falling off the global economy. And that's excluding tariff threats and all the rest of it, which will just make things 10 times worse. We already had the warnings 2-3 years ago when the yield curve inverted. I made videos back then and people laughed at me for saying it, but now the risk is so real and anybody can see it apart from those who are blissfully unaware, like this couple, but they're not going to be alone because they're just stuck in that hopium phase that everything's going to be okay. And of course, we know where that will likely end for them, unfortunately, and I don't wish that on anybody. So anyway, if you've enjoyed this video, I'd highly recommend you check out this video here. If you're looking for a new VPN and want to get the best one and want to help out support this channel, then go to expressvpn.com/marketmania. That's the VPN that I use, and I'll see you in the next one. Take care, guys.